What's interesting about MLP investments, I think, and one of the reasons they're becoming more popular is because they're related to the energy build-out in America. One area of the market that's been kind of on fire lately, and it's not just in closed-end funds, but it is in closed-end funds as well, is the MLP space. Now, these energy-oriented MLPs are, typically midstream companies that have something to do with, somewhere between the actual production of, say, oil or natural gas and the actual use of it. So you have a lot of pipeline companies, refineries, storage facilities, that sort of thing. There are more and more of these underlying companies have been coming to market over the last, say, 3 to 5 years. And as a result, and because of the way that they distribute their cash flow to investors in a tax-advantaged way, investors tend to be very interested in this. Right now, there are about 20 closed-end funds that are organized as C corporations, which means that they actually pay taxes, or if necessary, and that are organized as closed-end funds. In fact, three of them were just launched this year. As an investor, you really care about them because they throw off a lot of tax-advantaged income, because for legal reasons, in order to keep their master limited partnership status, they need to distribute, just like a mutual fund, something like 90% of their cash flow to investors. And the way they distribute that is return of capital. It's characterized for tax reasons as a return of capital, which makes it, for you as an investor, tax advantaged. For investors who are considering investing in MLPs and have thought about, well, maybe I'll invest in a closed-end fund that invests in MLPs, I think there are 3 things that they should bear in mind. 2 of them are advantages. The first is that when you invest in an individual MLP, your tax return filings can be a nightmare. You have to file taxes in every single state in which that MLP does business. If you invest in a closed-end fund or as in a C corporation type fund, the fund pays the taxes, so you just get a regular tax form in the mail, just one. The second thing to keep in mind is that this has been a very hot sector for a few years now. So the past returns may not be, especially in this case, indicative of future returns. And the third thing to bear in mind is that all the closed-end fund MLP oriented funds have leverage. They use leverage, typically between 25 and 30% leverage. So that's going to not only increase your distribution, which you like, but it's also going to increase the volatility of your returns. So the heightened risk from the leverage. So I think those are the 3 things that people should bear in mind when they're considering a closed-end fund for their MLP investment.
For more information and data on closed-end funds, visit our sponsor, cefconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.